Today, I want to talk to you about a DSCR vacation rental. So DSCR stands for Debt Service Coverage Ratio, and it's a very popular loan type for real estate investors to acquire large numbers of properties. And there's a specific type of DSCR loan that allows for short-term rentals. And this is the example I want to walk through with you today. So this is a hypothetical property that's for sale in California. List price is 1.299950. It's located in San Diego. And then the key here is what type of short-term rental income will this property generate? So in the industry, we use a report from AirDNA. That's a company that provides Airbnb type reports for the rental income potential of certain properties. So there's other companies that do something similar, but AirDNA is the big one in the room that most lenders will utilize for these types of loans. And so when this report was run, it showed a rental income estimate of $148,600, which is pretty substantial. Okay. This is what that breakdown would look like. So in this case, the investor that I was talking with ended up making an offer for 1.275. These types of loans typically require a 25% down payment. So traditional DSCR loans might allow for less if the property cash flows, but this specific type with short-term rentals, it is very common for a 25% down payment to be required. And then on top of that, of course, you're going to want to have some excess reserves, usually 6 to 12 months. But with this type of financing, the income of the borrower doesn't matter because it's just about what type of rental income the property can generate. So as long as you've got the assets, the credit score, and the property cash flows, you're going to be able to do this. Now, moving on, so that makes the loan amount about $956,250. That's the remaining 75% of the purchase price that the borrower was borrowing on the mortgage. Interest rate for these, it's going to be a little bit higher than what a traditional Freddie Mac or Fannie Mae type loan would be, but still in the same ballpark. So in this case, it's a short-term rental DSCR loan. So that interest rate is going to be about 8.5%. Just take that with a grain of salt because obviously rates change throughout the day, every day, and will absolutely be different anytime you go to see this video. Just use it as a guide, okay? Now that's going to cause the monthly principal and interest portion of the payment to be about $73.53. And then once taxes, insurance, and association dues are included, that payment comes out to about $89.81. All right, so that's the all-in payment. Now, this last slide shows you essentially what this breakdown means. So the monthly principal and interest of the property, that $89.81, the rental income from the AirDNA report, which was $148,600, which makes the monthly income $12,383. Now, that's the potential income. Does that mean if you bought this property, you would get exactly that dollar amount of rental income? No, but this is the guide that lenders are going to use when assessing whether this property is cash flowing enough to be approved for the loan. So the DSCR formula is the monthly rental income divided by the monthly PITIA payment. So principal, interest, taxes, and association dues. So in this case, the DSCR formula is the $12,383 divided by the $8,981, which means the debt service coverage ratio is 1.37, which is very good. So most DSCR loans will absolutely work with the DSCR coverage ratio of 1 or higher. Some of these short-term type loans require a DSCR coverage ratio of 1.25. So this property is a very good investment. You're going to cash flow thousands of dollars a month all over and above what the monthly payment obligation is. So this is a great way to build wealth. Now, there's basically 3 criteria. Do you have the necessary credit score? Do you have the necessary assets to close on it with reserves? And then does the property cash flow? So for short-term rentals, it's usually pretty easy to cash flow with these if you buy right and then follow the AirDNA guidance for what the likely cash flow of the property is going to be. Now, some of the gotchas here, DSCR loans oftentimes will have a prepayment penalty that will range anywhere from 0 to 5 years, with the most common time frame being 3 years. But you can buy it out and make it shorter if you would like. So just some food for thought. But the gist of this is get in now. If the property can cash flow at rates that we have today, just imagine what happens when rates dip in the future and you're able to refinance into a more permanent type loan. It can be another DSCR loan at the time, but at the end of the day, if the numbers work for you now, like they do in this example, it will be infinitely better down the road when you can lower your borrowing cost. And what a lot of my investors do as they own the property over a couple of years, every now and then they'll do a cash out refinance, strip some equity out of the home, and then turn around and go buy another property with that. So this can be a great way to house hack your way to wealth over time. And DSCR loans are the easiest loans for real estate investors to get. Remember those three criteria. Do you have the cash flow? Do you have the assets? And do you have the necessary credit score? If you've got those three things, you're rock solid, and I'd be happy to help. You can close in your individual name or an LLC's name. This is an investment purpose loan. So hope you like this video. If you do, make sure to like and subscribe. And if there's anything that me or my team can do to assist you, happy to help. We're licensed in tons of states. And as a broker, I've got access to dozens and dozens of DSCR lenders that can help with this. And we'd love to knock this out of the park for you. Hope to hear from you soon.